Yeah. Okay. So let's view this from two angles. The unleash of these savings will drive positive near-term GDP growth. That's for sure. Because the removal of the anti-COVID policy actually will release the pent-up demand that has accumulated over the last few years' time. So this is first thing. A lot of people actually would think this is short-lived, but I think in China the consumption story will continue to go for at least 5 to 10 years time. Reasons being is we mentioned earlier about the policy change of the China GDP growth structure. And they're more focusing on localization. So that means they're relying on domestic strength to support the growth. And consumption is the biggest part of that contribution. So what the Chinese government is looking is to ensure that savings, the huge savings that you mentioned, to put into work. To inject these savings into the actual real economy by consumption. So I think when we're looking at the amount and the level of the Chinese household savings as a percentage of GDP versus the U.S., if we're bringing that the Chinese household savings level to where the U.S. Level in the next 10 years' time, it will contribute to 4% GDP growth on a yearly basis. So just taking a step back, if we think 5% GDP growth is the Chinese government target, on consumption that will take up 4% if that works. Remaining 1% will be actually much more easy to manage on the GDP growth. So I think that savings will continue to drive the growth, and also because of the rising middle income class, I would actually view this as a more sustainable growth driver rather than just because of the reopening, and that will just drive a very short-term strong rebound in the consumption.